All right, hello everybody. On December 31st, 2020, the three owners of Taylor Guitars, its founders Kurt Listug and Bob Taylor, as well as Taylor's chief designer Andy Powers, sold their company to an ESOP, representing its 1,200 employees in the US and Mexico. The transaction was financed by us at Social Capital Partners, by the Healthcare of Ontario Pension Plan, which I'm going to call HOOP for the remainder of this presentation, because Healthcare of Ontario Pension Plan is quite a mouthful. And of course, their owners, Kurt, Bob, and Andy. This deal had many firsts. Among them, it was the first time Mexican employees were included in an ESOP. And to our knowledge, it's the first ESOP formation to be funded by a pension plan. My name is John Schell. I'm Managing Director and Partner at Social Capital Partners. I want to thank the folks at Rutgers for inviting us to talk about this transaction. We think it demonstrates a very real opportunity for both institutional capital providers to achieve risk-adjusted rates of return, while also achieving their social objectives, and for owners of industry-leading companies like Taylor to find great funding partners. Over the next 30 minutes or so, at least that's our target, we're hopefully going to tell an interesting story about this transaction from a few different perspectives. Ours at Social Capital Partners, where we work to co-invest with large institutional capital providers in the funding of employee ownership. From the investment bank, who knew they needed a different kind of capital to support the goals of an incredibly successful and principled company and their owners. From HOOP, a large and sophisticated investor who is new to ESOPs and who would be financing employee ownership through an ESOP for the first time. And of course, the owners of Taylor Guitars, who needed this transaction to fit their objective of ensuring their company can sustain itself for the next 100 or 200 years. We have on the call Kurt Listug, co-founder of Taylor Guitars, Janice Top, the partner at HOOP, who quarterbacked this deal for the pension plan, and Ted Marguerite, managing director at Chartwell. And set the stage, I'll provide a few details about Taylor Guitars, and then we'll start the conversation with the folks on this call. So just pull up a slide here, which will happen momentarily. Okay. So Taylor Guitars is started in 1974 when Kurt and Bob and another partner bought a small guitar shop in San Diego. After a slow start, and it's a great story if you ever get a chance to hear it, Kurt and Bob grew Taylor almost uninterrupted over the last almost 50 years into what is now the largest manufacturer of acoustic guitars in the US. They not only make a lot of guitars, but they make great guitars. Taylor is legendary in the industry for its quality and is used by performers like Jason Mraz, Zach Brown, and of course, Taylor Swift. They also care deeply about making guitars. On our first calls, they consistently said that they were luthiers and the company needed to be run by luthiers. Now, I didn't know what a luthier was, so I thought they kept saying Lutherans. And I thought, you know, that's weird, but I guess they must be serious about their religion. But as it turns out, and maybe they are, but as it turns out, a luthier is what you call a guitar maker, which was a good thing to have known going into those calls, but you know, we'll leave that. They are up to 1,400 employees, mostly in their manufacturing centers in El Cajon, California, and Tecate, Mexico. And the number 1,400 has gone up since we were involved, and in fact, went up today. Earlier today, it was 1,300, and then I got an email saying, no, it's actually 1,400. So the company's doing very well and is now manufacturing 200,000 guitars a year. As you might imagine, this is a company that everyone would want to buy. We'll provide more details about the transaction as we go today, but the basics are that Kurt, Bob, and Andy sold 100% of their shares to an ESOP trust. Social Capital Partners and HOOP Capital Partners provided first lien, long-term, fixed rate, and flexible debt to help finance the transaction, with the rest coming from the owners themselves in the form of a seller note. Taylor will now pay down that debt, and the benefits of those payments will accrue to their now 1,400 largely middle-class employees. It's turned out to be a wonderful transaction for everyone involved. We certainly hope a model to entice more institutional capital into the ESOP sector and a way to provide more flexible, longer-term financial support to other owners selling to their employees in the future. So let's talk about how all this came together. Kurt, let's go to you first. Tell us about, and I may still have this, I'm gonna move off of this page here before I go to you, Kurt. There we go. Okay. Kurt, tell us a little bit about the situation at Taylor when you were thinking about succession. What were your goals and what were you trying to avoid?
Okay. Well, first thing I want to say is that Ted is based in Minnesota, and there are a lot of Lutherans in Minnesota. In fact, I was raised a Lutheran, complete coincidence, and a lot of them are from Minnesota.
Well, maybe you were saying Lutheran, Kurt, and the others were saying
no, I wasn't. Well, you saw on the slide there that Bob and I started the company in 1974. Obviously, we were a lot younger than we are today. I was 21, Bob was 19 when we bought this little guitar shop called the American Dream. We put together $10,000, we borrowed from our folks, paid $3,700 for the shop and started. So obviously succession wasn't anything we were thinking about. And we didn't think about it for a long time. We had a third partner when we started, we bought him out in '83. And at that point, our attorney was just finishing a transaction for a client who'd sold his company. And Bob said, like, well, we're never going to sell our company. And Ed, the attorney, said, well, sure you will. You know, you'll at least sell it when you die. You know, it's inevitable that you sell your company. So we kind of filed away in the back of our minds, you know, I guess we will. Who would we sell it to? And we thought it would probably be another guitar company. And we had that in the back of our minds for a long time because we're a teeny, struggling little company. And we didn't have any concept that we could remain independent. You know, we weren't very well established. So then in 2007, we were approached by another guitar company who was doing a roll-up. They wanted to know if we were interested in selling. And we talked with them a bit. We didn't go down the road at all. But Bob and I decided we don't want to do that. We don't want to become part of another company. But then I proposed to this company who had continental distribution in Europe, which we didn't. We had 21 independent distributors and it didn't work well at all. I proposed to them, well, maybe you could distribute us in Europe and, you know, get to know you a little bit better. So we did that and they did a horrible job. We got to know this company. They're an industry leader. They still are today. They did a really poor job representing us in terms of sales and marketing. So from that, we came away feeling like, well, you know, we're at least as smart as those guys, even though they're bigger, and we make better instruments. You know, maybe we won't need to sell to another guitar company down the road. And we thought about, you know, we're aware of private equity, but that didn't appeal to us at all because we thought that, you know, you sell to another company whose main objective is financial. Our main objective wasn't financial. It was to design and build guitars. First and foremost, that's what we want to do. And to make the best possible guitars we can that encourage people to play music because the world needs better music. And we need to be, of course, financially successful at doing that. But that was our purpose, to do that, not to become a brand that, you know, has their guitars made in Asia for them or, you know, all sorts of other things. So then in 2013 or so, I was on Christmas vacation and I was reading about Patagonia because they're an interesting company. And somehow the path led me to reading about companies that had become ESOPs. Now, we'd heard about ESOPs maybe 20 years earlier from our insurance agent. And we thought, well, how would our employees buy our company? They don't have any money. I mean, that just seemed ridiculous. So the more I read about ESOPs, the more excited I got about it, about the tax benefits, about being able to sell, you know, part of the company, bigger pieces over time, or the whole thing. And so when I returned from Christmas vacation, I met with Bob Taylor and Barbara White, the CFO, and I told them what I learned, and then we got all excited about it. So then we started meeting with different consultants, and that led to TED, and I guess the rest is sort of history. But the idea that we could remain independent then, we were very, very excited about. And in our industry, there's a history of that. Like Zildjian cymbals started in what was then called Constantinople in Turkey in 1623. They're still family owned. They're still the market leader. Martin Guitars, our chief competitor, started in 1833. They're still family owned. Then a couple other companies, they're not independent anymore. Steinway, 1853, they've been public. Now they're owned by John Paulson's company. And then Gibson Guitars started in 1902. They've had various corporate owners. They're now owned by KKR. So the idea of a musical instrument company remaining viable for 100 or a couple hundred years is very real to us, and we wanted to make the best decisions that would enable us to do that.
Okay, that's great. Thanks so much for that. And just following up quickly, did you have concerns about the ESOP structure going in? I mean, other than the fact, once you realized employees didn't actually have to pay for the shares, was there anything else about the ESOP structure that you were worried about going in?
Going in, no, not really. Santa's super positive. Ted worked with us on a million different scenarios to do it, and some of which were like selling 30%, then going up to 49, and then finally selling the whole thing. But because ESOPs have seller notes and seller financing, I was going to be about 129 by the time I finally got paid after going to 100%. So that didn't meet my personal objectives.
Hey, thanks, Chris. Ted, how common is the situation that Kurt and Bob was in, and how did you structure an ESOP process to appropriately accommodate the things that they were worried about?
Yeah, it actually is fairly common, and as an advisor who does ESOP as well as non-ESOP transactions, it's amazing the number of people that have only thought of their succession as private equity or selling to the competitor, or one of the more traditional routes. And I think to the point that Kurt made, and is so evident in the objectives that he and Bob and Andy had in this transaction in terms of longevity and legacy, and this idea that we didn't do it alone. Our employees helped us. That philosophy is alive and well in what I'll call the middle market in the States. And it's something where an ESOP is gaining traction. I'm gonna
share a screen here. Just can you talk through what Taylor was looking for in a potential capital provider?
Sure. So first and foremost was the sense that this is a long-term partnership. There's as Kurt alluded to, there was a strong feeling that Taylor is a company that's going to be around for centuries, and we're building something that we want to stand the test of time. And so finding that partner who can make sure that happens, and it takes a whole host of things. First and foremost, the flexibility. There will be in any business good times, there will be not so good times. And having the flexibility to go through those together as partners was paramount. Separately within that is growth. There's a lot of growth opportunities, things that have since come up we didn't even know about a year ago at the transaction, that have come up where the company wants to make some investments, capitalize on some of the strength they're seeing in the market today, and finding a partner that's right there with them and happy and very supportive to help them pursue that growth, even in the midst of just having gone through a transaction like an ESOP is important. And then the last thing I'll point to is someone who's committed to all stakeholders, in that this should be beneficial for the company. It should certainly help the shareholders achieve their personal goals, but at the same time, doing it in a way that's value creative, not value disruptive. Looking at this as not just zero sum, that everyone can get a win, so to speak, in this if we do it right, and I think we did.
That's great, thanks so much. And we'll pull up that slide up again. And one of the quotes I think you mentioned to me about this that Andy had, he said, if properly cared for, a musical instrument can last and be enjoyed for centuries. Why can't a musical instrument company be the same way? And I just think that's a terrific quote.
Yeah.
So now when Ted came to us with this opportunity, we turned to Hoop, which is a Canadian pension fund with a reputation for out-of-the-box thinking and a firm commitment to ensuring their members achieve a strong financial return. We thought they'd be a great test case for the theory that pension funds could be a great source of capital for ESOPs. Janice, we bring you in now. Can you tell us a little bit about Hoop how does a pension plan like yours, and specifically, your group at the pension fund, look at a debt instrument like this?
Thank you, John. So just a bit of background about who. We are a defined benefit pension plan. Our beneficiaries are hospital workers in Ontario, Canada, which are non-doctors. So we're talking about 390,000 really important healthcare workers, nurses, support staff, people who work in the cafeteria, who are all working really hard every day to provide healthcare services for us. And so our driving purpose is to make sure that we provide these great individuals with a financially secure retirement. And right now that's about $28,000 a day, a year. And that's supplemented again, of course, with our Canada Pension Plan as well. We deliver this promise by investing $100 billion of assets across the investment spectrum. So we invest in debt securities, public equities, private debt and equity securities, infrastructure investments, and also real estate. We do this at home and we do this globally. And so as John, as you mentioned, I'm on the private capital team and we refer to ourselves as HCP. We invest 12 billion out of that 100 billion of assets, and we focus on private debt and equity. And our returns need to be strong in order to deliver on that pension promise. And we have been over the last 5 years. Our group has delivered an annual return of 14.5%. So it's Taylor really met our investment mandate because we can invest across the capital structures. So we aren't just a private equity firm, and we certainly have, because we're a pension plan, we have no end date on our investments. We are here for the long haul to support our investee companies as best we can for as long as needed.
That's great. And, we had some great conversations at the start when we were talking about this deal. But once you got into it, what were the things that you liked about this deal and this company?
Yeah, there were a lot of things we liked about this deal. I'd have to start with first, the company. It's a great company. It's a wonderful product. And as we learned more about the business and the founders, we saw it was supported by a strong team and founder base that we had 100% confidence in. We are a people business at the end of the day. We're investing with people for a very long period of time, and we want to partner with high quality people. And boy, when we were doing the due diligence process, that came through in spades. Good people and great partners. Another important aspect of the transaction, so once we were really happy about the company, of course, is the investment had a lot of really great ESG aspects, not just the wealth management aspect of the ESOP. That was number one on our books, obviously, but Bob and Kurt have done a lot within the business with respect to sustainability. And this too is really, really important for us when we're looking at companies to invest in. And then last, of course, is the financial return. We do have our financial targets, and we loved this investment from a risk return profile. We invest across the whole capital structure, and the return profile for this particular debt and private debt investment was very attractive for us, as well as the term.
Thanks, Janice. And before we go right back to Kurt, I just one more question. The ESOP was obviously something you hadn't invested in before. When we first brought that to you, and how did you think about the ESOP as part of the deal?
We're pretty flexible on structure. As we're happy to just look at any type of structure, and so ESOP was just a new way to do an investment, and something we've not seen before. We had a lot to learn as we diligenced it and understood it more deeply. It was just such a great opportunity. We just loved the idea, and we were so happy that Kurt and Bob allowed us to go on their journey with them in this opportunity.
Thanks so much for that, Janice. And Kurt, this was a very high demand company to get involved in. Would have been no matter what process you ran. So talk about when you got the offers in for the ESOP. How did you feel about them? What was it that made the SCP Hoop approach stand out?
Well, it was interesting because we'd never done lender presentations like that before. Getting all organized, all the different executives presenting their story for their part of the company. It was actually a lot of fun. Kind of telling our story and selling the company.
Well, and I'm going to interrupt you, Kurt, because these were unbelievable lender. But so what would happen is an executive would present, and then Andy would come out and play the guitar.
Yeah.
And so there was this interlude, and it was like if you didn't think this was a guitar company beforehand, Andy playing every 15 minutes between presentations. Sorry, Kurt. I had to tell that story.
And John, that was actually a commercial. We were actually hoping people would buy guitars after watching the presentation, so it all fit together.
Well, there was a bump that month, Ted, so it probably worked.
Yes.
Sorry, Kurt.
Yeah. Thanks. So it was a lot of fun. Ted and Greg Fresh said it was very well received. There were a lot of people on the calls. We did it 2 different days. We got a lot of strong, Ted shared with us that we got a lot of strong feedback and a lot of proposals. And then it was a matter of going through the proposals and weighing through them and sorting through them and kind of narrowing it down to those with the most attractive proposals. So Social Capital and Hoop stood out uniquely. One of the things that was attractive to us was that it was a longer term than any of the other lenders, and we weren't crazy about the potentiality of having to refinance every 5 years, because this is the most debt the company has ever had by far. I mean, we had 0 debt at the time of the transaction, and we've always kept our debt level very low, to keep the stress level low. So the idea that we would have that, we do the transaction, we'd get 5 years into it, and after 4 years, we'd be, out doing the same thing again, making the pitches and basically having to pay off that first loan, with a new loan. So the 10-year term was way more attractive to us. There are other parts of it too. You guys give us the ability to, if we got into a rough spot, which can happen now and then, I mean, you can't predict these things, to convert that year the interest payments to PIK interest for a short period. That could just, be kind of a relief valve. So that was really nice to know that we had the ability to do that. And the fee structure too was more amenable to us compared to the other lenders.
Oh, thanks, Kurt. And Ted, maybe I'll come back to you here, and maybe just you can walk through what those priorities were coming in, and how you saw this offer meet that mark.
Yeah, absolutely. And Kurt hit on several of them. The longer term fixed interest rate was something else. No warrants, no equity kickers in the background. And I'm going to dovetail off something Janice said, which I think was spot on, which is they view this investment as a very attractive return profile. Similarly, from the company's perspective, the interest rate was very competitive with the competitors that Hoop and Social Capital had. But at the same time, the company saw real value there. So back to my earlier comment about this not being a zero-sum game, having the fixed interest rate, the 10-year term, partners that Bob and Kurt felt very comfortable they can rely on, and it's already been proven that to be true. This was a win-win, and as you tick through this list about the flexibility, the ability to periodically switch from cash to PIK interest if business conditions or growth opportunities merit, as well as just the alignment with the employees. I mean, there are things, I'm not going to go into details, but there are things in the credit agreement that you would frankly not see with any other lender in the credit agreement that are pro-employee, not pro-company, not pro-shareholder, pro-employee. And I think that just speaks volumes. And from Bob and Kurt's perspective, I'm not going to speak for Kurt here today, but I think as we reviewed the proposals, Hoop and Social Capital just really head and shoulders differentiated themselves. And then the last thing, and I'll never forget, I was not on the call, but there was a call, a reference check that we conducted on Hoop and Social Capital. And Bob and Kurt and Andy reached out to Hamdi. Hamdi is the founder of Chobani. And after that call, I remember hearing from Kurt and Bob about, just the great things and the strong partnership that Hamdi referenced. And I'd be interested, but for me, in my head, that was the final nail in the coffin, so to speak, that this was the right partnership for the company.
Yep.
Yes.
Yeah, I'll add too that something attractive about Social Capital and Hoop is that they were really investing for the benefit of the people, for the retirees and their pension. They weren't investing for the benefit of investors who are already rich people. And really, our employees, any middle class people or lower, they need a helping hand to create wealth. They're really kind of behind the 8 ball. I mean, you're looking now with housing prices escalating. People's wages don't go up fast enough. So the idea of including all our employees, including all our Mexican employees, and that Hoop is really working for the benefit of the retirees. We thought we were well aligned in that.
Mm-hmm.
Yeah, very cool. Janice, this is, I understand the deal looked pretty good risk return, but it's an unusual thing for a pension fund to do, right? In fact, it's the first time it's ever happened. And so, I think what you guys have done here, certainly stepped outside. And what I'm interested in how others at Hoop, because you're part of Hoop, it's a large organization. How did others at Hoop receive this? How do you feel about the deal now? How did others receive it? How did your community of institutional investors receive it?
Yeah, so, everyone's really excited about this transaction, everyone within Hoop. ESG is becoming a very important part of everyone's investment thesis, and thank goodness it is, and it will continue to grow momentum. So this is just, one step forward for our team to focus on more ESG opportunities. And this is the S in wealth creation, but it's just our entire organization is really, really focused on doing more of these types of transactions. So maybe we don't want to get that secret out so much, John.
It's more than enough to go around. Janice?
I don't know, because we really, really love this investment, and we're really excited to do some more. Yeah.
And Kurt, just coming back to you for the final word here. Tell us how the company's going, right? How, you've done this deal, you had your presentation to the employees earlier this year. How do you feel about it? How are you noticing the impact on the employees, and how's the company going? How do you feel about this a year after you started the process? Or not, sorry, I should say 1,000 years after you started the process, but a year after we started talking.
Well, I think that Bob would say that he is relieved. That was Bob Taylor's thing all along, was the problem of, man, I can't die and leave this to people and leave them the problem of sorting it out. We really wanted the company to be in the best hands. And speaking to our culture, it was interesting because we had so many meetings over a lot of years where Ted and the gang and other people would come in, and our employees, including people who have been with us over 30 years, they never suspected a thing that we were working on a transaction. We didn't have NDAs with the employees that were involved in the transaction. And that really speaks to the culture and the level of trust within the company. So when we made the announcement, people were floored because they knew, it was an important announcement, man, and everyone in the company needs to go hear it. And of course, people had wondered, because we're getting older, something has to happen someday. And people assumed we'd be selling to another guitar company, because that's what always happens. So really, this just came out of left field, and people were shocked. They were stunned that we chose this path. And it's the right path. It's the right path for everybody. So we're thrilled about the whole thing. People are motivated. They don't really understand it because it's pretty complex, but they know what the future is going to be now. They know that they're not going to come in one day and find out they're working for an unnamed, private equity group or another guitar company that they don't think is as talented and capable as we are.
And how's the company performing? Like people worry, okay, we're going to sell to our employees, and then what happens next? How's the company doing?
Well, we're doing incredible. Part of that is we're one of the lucky beneficiaries of COVID because we're experiencing the biggest guitar boom there's been, bigger than after the Beatles. So, we're making close to 1,000 guitars a day, which is way up. We've had as many as close to 250,000 guitars on order, so it's, the demand is at the roof. So we're doing everything we can, scrambling like crazy in spite of all the supply shortages, the shipping delays, we're having everything thrown at us. And somehow every week we manage to get the guitars made and delivered if we can get the trucking companies to show up and pick them up.
And has it had any impact on sort of on behavior of people in the firm? Like, have you noticed any change in sort of people's day-to-day activity?
People are motivated, really super great teamwork, people working together. People always, address in the reports and in meetings about the other employee owners. The employee owners are doing this and that. So yeah, people are very motivated, as opposed to if the announcement had been different, a lot of people would have been working on their resumes.
Yeah.
Pretty quickly thereafter.
Yeah, right. Ted, Janice, before we end off, anything else you want to add?
I would just add that this is a transaction of a career. I remember telling my team that assisted me on the transaction that this is one of those transactions that you'll always remember. And it wasn't just because of, I don't even know how many dozens of trips to San Diego to have those meetings with Bob and Kurt. But it was also, I remember the announcement. We were fortunate enough to be able to go out to San Diego earlier this year for that. And the look of a guy who's been working on the shop floor for 20 years, blue collar guy, works hard, works with his hands. I remember several of them coming up to you, Kurt, and to Bob, just expressing their gratitude. They didn't, to your point, they don't really understand it, but what they know is that you're making a commitment to them through this transaction and their futures and their families' futures. And I think they're just extremely grateful for that. And that's one of the great privileges I have in my job, and frankly, why I do this.
Cool.
And for Hoop, all I can say is we are so proud and so happy that we were able to take part in this. It's very rare that we get to work on a transaction where you're marrying a wonderful investment with just a wonderful, good social aspect. Putting the company in the hands of the employees for the future, it just felt really good. So thank you for allowing us to participate.
Thank you.
Yeah. Thanks everyone. Thank you, Kurt, Ted, and Janice for doing this. I mean, we obviously strongly believe that this transaction is a demonstration of what's possible, both for institutional investors and for owners of private sector companies. Risk-adjusted rates of return and important social returns are possible for credit investors. And one of the beautiful things about this deal is we can measure it, right? So every year, Taylor Guitar is going to, as an ESOP, has to measure how they're doing, and we're going to know every year exactly how much wealth has been created for the employees of the company, which is great. I mean, it's one thing to say you do something that has a social impact. It's another thing to be able to say exactly how much social impact you've had. And since we've done this deal, we've had other institutional investors. Sorry, Janice, we tell them that they're always second, third choice, but they've reached out anyway about deals like this, and we're always interested in these conversations. Although you'll always rank much lower than Hoop. But if you do want to get in touch, please do. I would love to have a conversation. And we can't wait to come back to this event, Rutgers, with another transaction to talk about. So thanks everyone, and have a great day.
Thank you.
Thanks. Have a great day, everybody. Bye-bye.